Good day, my name is Nicholas Babaya for the Centre for Risk Analysis. How have South African equity markets fared given the current economic climate? And more specifically, how have South African equity markets done in comparison to those of the United States and elsewhere around the world? In this video, Frans Cronje compares some indices of equity markets from around the world and gives his insight. If you'd like to watch the full video, it's available on the CRA website behind the paywall.
From the currency to the equity outlook, if the global economy's recovery holds up, the public availability of the vaccine next year will help that. The sort of normality reduced the world by the liberal internationalism of Biden's administration in America may do that as well. The stimulus will continue in the West. China's clamping down on political instability around Hong Kong. All of these drivers of global stability. That recovery persists, risk on outlook stays, that should lift the South African equities market into the short term, at least. But domestic earnings, firms on that market that earn in South Africa, continue to face an extraordinary number of headwinds, and these will persist through the medium term. The outlook, therefore, from us is that you can actually look back here to look forward, to understand what you're likely to anticipate, what you could see coming out of the South African stock market. The chart runs from January of 2009 into a couple of months ago. And what Beki did is he said, if you invested $100 in the S&P 500 in January of 2009, what would you have now? And you've got about 350. In the MSCI World Index, but in the FTSE, in the Aussie here, you have done somewhat worse. The Dow 30 Industrials, you've done somewhat better. That relative underperformance over time is what we anticipate from the South African market, given the headwinds that the South African economy will continue to face. Into the short term, though, that might not apply. And the reason is manifold. I've suggested some of them. The risk-on stuff's important. And look at one example of that. It's the data runs from December of 2010 into the very near present. And it's a US dollar index, that same index, the strength or weakness of the American dollar, plotted across the all-share index in South Africa. Now, initially in the chart, you don't see the relationship that I'm going to show you now, because this is still the era of the post-financial crisis recovery, and the Aussies making up all that ground that's been lost in conjunction with stock markets around the world. But thereafter, once it gets back to a sort of even keel, as the dollar strengthens, look at the dollar index rising, you see the commensurate fall off in the all-share index. As the dollar weakens again, there you see the lift in the all-share index. And the pattern, as far as we go, repeats itself over and over again. The extremes start becoming more apparent as you go later into the chart. And what little lift you've seen in the Aussie of late, part a function of what you see in the weakening dollar there. So if you can make a call on the dollar, probably make a fairly calculated call on the Aussie. I have to tell you, we don't offer investment advice. Don't take it as that. Go and talk to your broker if you want to make a decision based on this stuff. We're just strategic intelligence analysts showing you how the charts and the like stack up to each other. But again, the outlook in short term for equities here, but better than it's been. But in the long term, it's not great at all. And that's a theme of this briefing. Short term for South Africa, you might see the currency come back a bit. You might see the stock market do a bit. You might see a little bit of complacency develop around the place. The idea takes hold. Maybe the reform movement is getting a bit of traction. It's very dangerous and very misleading because the fundamentals to support it are not in place. And South Africa could be setting itself up for some pretty dramatic reversals. Stay with this chart. It's the same chart that you're seeing here, but it's not a 10-year view. It's actually the view since December of last year. There is the dollar index as it weakens in the aftermath of the COVID crisis. There's the all-share performance, and the relationships between the two are very apparent. Close view, what do we think the big risk position now is on the economic outlook for South Africa? We distill it to one big thing, but it's made up of components. And our view is this: Through the short term, it is possible that great sort of global political normalization, the vaccine availability, global recovery that might draw strength from both events may buoy optimism, wave of risk on sentiment, sees the dollar weaken, commodity prices strengthen, that buoys emerging markets, economies, their markets and currencies, including the rand. However, for South Africa, through the medium term, 12 to 36 months, given the weak fundamentals, our expectation is for the economy to average only a third of emerging market growth figures, the currency to weaken further, markets to underperform their peers. And on top of that, should global circumstances turn, foreign interest rates rise, for example, which might see a great stampede out of the rand into the dollar, given that the yield equation won't be so favorable anymore. Just one example of the kinds of risks we face. South Africa is terribly exposed and is at risk of suffering spectacular economic and currency reversals.
If you enjoyed the content in this video, please give it a like and subscribe to the CRA YouTube channel. Please follow the link in the description if you'd like access to the CRA's exclusive 30-day free trial.